Well, there was good news today for those that are worried about inflation. It's Friday, December the 5th, and this is Markets with Megan. If you like this podcast, subscribe, hit the alarm bell, share it with your colleagues, your friends, your family, anybody who's interested about what's going on in the economy and how it's relating to the equity and bond markets. So this morning we received the much delayed Core PCE reading, and this is the Fed's preferred inflation reading. And we got this for the month of September. So as I mentioned, very delayed because of the disruptions with the government shutdown. But it was good news. Core PCE came in as expected. So Core PCE will exclude volatile items like food and energy. It rose 0.2% in the month of September. And on a year-over-year basis, so this is when the Fed's talking about their 2% target. This is what they're looking at. It's annual year-over-year change in this indicator. It was 2.9% annually in August, and it did dip modestly lower to 2.8% in September. So that's good news for the Fed ahead of their meeting next week. The preliminary reading of University of Michigan consumer confidence also came out today, but that's for the month of December. And there was good news there on the inflation front as well. So the one-year expectation for inflation from consumers dipped from 4.5% to 4.1%. And then the 5 to 10-year expectations fell from 3.4% to 3.2%. Now, why is this good news? Because consumers can sometimes feed inflation without realizing it. If consumers think that inflation's going to be high in a year from now or 5 to 10 years from now, they'll speed up spending. And what happens when they speed up spending? That can just fuel inflation inadvertently. Now, it also helped consumer confidence, the main reading of that report, rise for the first time in 5 months. And that's because lower inflation expectations means that consumers got a little bit more optimistic about their finances. And consumer confidence has been something that's just been very, very weak in all of the different indicators that we look at. So any improvement is good news for the economy. Now, what does this mean for the markets and for the Fed? First of all, the Fed meets next week, and this does pretty much solidify a rate cut in their meeting next week. The futures market is pricing in about a 95% chance. So that's about as good as it gets. They're likely going to cut 25 basis points. Remember, the statement is what's important, and that's what tends to move the markets. Now, for today, the equities are modestly higher on this news. They came out very strong this morning after we got these reports. We did intraday. The S&P 500 did trade above the recent high to hit a new record high at 68.95, but we have pulled back from that. So unless we see some big improvement turnaround here this afternoon, it's going to be a close call to say we end at a record high today. That looks like it's kind of stuck here, slightly lower than that intraday high we saw. That's all we have this week for Markets with Megan. We'll be back next week with a packed week of economic data as the government's slowly releasing these reports and a Fed meeting. Thank you. And if you want a history of the podcast, you can go to marketswithmegan.fm.